Huge opportunity in the market right now. We've got tech stocks on sale. We're going to cover trades in AFRM, AMD, PLTR, SOFI, Upstart, Novo Nordisk, Tesla, NVDA, and Eli Lilly. We're going to talk about where we are in the market year to date, what it looks like moving forward. We're going to touch on the economic news, interest rates, and we're going to go into the live trades on the option trading platform. Before we get started, make sure you hit like and subscribe down below. Download the free options workshop. It talks about the main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research, and if you're new or a beginner, start small. All right, guys, we're on the Tasty Trade option trading platform. Check it out. There's a link down below. There's some benefits if you go through my link. It's super intuitive, and I think one of the best, if not the best, for trading options. All right, we're going to start out with AFRM, ticker symbol AFRM, and I'm going to put on a poor man's covered call. So I'm going to buy a deep in the money leaps option, the 45 leaps, and then sell a 50 call against it. Now, AFRM operates a payment network that helps consumers and merchants drive growth. So there's three core elements with AFRM. They've got point of sale solutions for consumers, merchant commerce solutions, and a consumer focused app. But these guys are huge. They've got buy now, pay later. If you look at the chart right here, they are trending up. This is kind of a flag pattern, and we've had a drop, so I've been waiting for a pullback. I've traded it before, but we've got the 50-day moving average in the green coming up on the 200-day and about to break out, and then the white lines are the Bollinger Bands. But I love the chart setup in AFRM, and they just had Q1 earnings. They beat on the top and bottom, but guided lower, and the stock pulled back 14%. So this is a perfect time for the poor man's covered call strategy. And I've got the March 45 call that I'm going to buy and then sell the 50 call against it. I've got it below the market right now because I'm going to wait for the market to open Monday. But we can do that for $10.54, and one option contract controls 100 shares of stock. So it's $1,054, but each month. So if you look at we can go to the trade page here. I'm going to go to March, and we've got calls on the left, and this is where we can buy. What was I going to do? I was going to do the 45. Yeah. Okay. So we could buy the 45 right here, and this is what I like about the platform too, is curve mode. And you can go to and see, actually it's messed up because I've got another trade on, but you can see with buying the deep in the money leaps, it increases your profitability. So you actually make right here at around 70, you're going to make $1,300. You're going to double your money on your investment. But $13.45, so times 100 shares is $1,345, and it simulates owning 100 shares of stock. But we're going to not only do this, we're going to close that, and we're going to go back to table mode. We'll close this option chain, and then we're going to sell a call against it, the June call. And I think I was going to do the 50 probably and collect $259. That brings down the price to $10.54. So that's the trade that I have on. And you can do this. This is the 40 delta. So you've got a 60% chance that it's going to stay below that 50, and you'll keep all that $259. But for $1,000 and then collecting $250 per month, you're going to pay that off in less than 6 months, 5 months, and then you can own 100 shares for free. So that's kind of my strategy with a lot of these hot stocks that we're going through that are down right now and on sale. I use a poor man's covered call. I go out a year and then sell the monthly calls against it, and you can pretty much double your money. So I've got that set up for Monday. Let me know down below in the comments if you're trading AFRM. The next one is AMD. You can see I've got two poor man's covered calls on in AMD. Same strategy that we just went through, so I'm not going to go through all of that. But right now it's trading at 102. If we look at the chart right now on AMD, look at that. It's been trending down, but I don't think it can go down much further. They just had earnings. They've had earnings the last 3 times, my gosh, on AMD. Let's go to Yahoo Finance. But look at this. Their target's 126. Mine's much higher. My target for AMD, let me know what your target is for AMD, but mine's 150 easy. And, it's going to continue to dominate over the next decade. But they've got a PE of 19, PEG ratio of 0.35, price to sales of 6, 50% gross profit, net margins, everything's huge. And if we go here to the analysis tab, well, actually, let's go back. Summary. You can look at the chart, but you can see where they were. They were up at 204 just back last year. 52-week range. So I like it when there's a big range like this. There's a lot of room up to 187, and they've been killing it. Analysis tab, you can see 3 beats. They just beat earnings, and the stock should be much higher in my opinion, but hey, I'm fine with it because they had Q1 36% year over year revenue growth. They've got the MI 350 and MI 400 coming out, and to me it's a buy hand over fist. They've got Xilinx and ZT Systems acquisitions, and stocks don't move when you want them to, but that's fine. They just did 36% year over year. So huge buy. Poor man's covered call. No brainer to me. All right. Next one that we were going to talk about, Lilly. I've got that on. Is that the next one? Let's see. They had earnings and huge buy opportunity. Yep. So Lilly, I'm just going to do a put spread, 700, 690, $10 wide put spread, but you can see it's down right now. Huge buying opportunity. They missed earnings, and it was a Q1 miss, but it was due to mainly R&D charges in Q1, as well as net losses on investments in equity securities. So not good, but these aren't operational costs that weigh on profitability. So it's a huge buy opportunity for me. It's a strong drug stock with diabetes and weight management, weight gain management. They've got a huge pipeline and super solid. They've got a dividend, I think, even, but super solid company. But love the chart. If we go to the financial page here, we can look at finances. I'm sure the fundamentals, yep, super strong. Look at the revenue and net income on the income statement, and then annually the balance sheet. So, I mean, unbelievably strong. So I am just going to do a put spread. I've got that set up for Monday. We're going to collect a third the width of the strike. I've got it. I put it above the market right now, so it's going to open up. I like to collect about a third the width of the strike, so I'm looking to collect $3 on a $10 wide, so $300. But to me, this is a no-brainer. I don't think it's at risk of dropping much further than where it is right now. All right, what do we got next? Sorry. Okay, Lilly, Microsoft. These are other trades. I'm not going to go through each one. I'm going through the best buys right now, but all these are good. NVDA, I think, is next. Let's look at where we are in NVIDIA. But these guys, I just did a video on NVIDIA, and I put on a poor man's covered call. Normally, I trade put spreads, but oh no, I didn't. Oh yeah. I've got one poor man's covered call in NVIDIA right now. So we've got the 110 November call, 194 days out, and then I sold a 130 against it. And then I've got a 110, 100 put spread. And you can see as soon as that 50 crosses the 200, I think it's going to skyrocket up. But again, unbelievable balance sheet. These guys are dominant. The range right now, or the 12-month range, is 76 to 150. It's at 116 right now. They just had earnings and beat. My target's 170 easy in the next 12 months. I think it can move up beyond that. But to me, huge AI plays. There's the wife and the dogs. huge going forward. Novo Nordisk, another. I've got two poor man's covered calls on. Great drug stock. Yeah, unfortunately, it's been trending down, but super solid. I don't know how much further it can go, but to me, again, stocks don't move when we want them to, but super solid fundamentally. You can look at the income statement and balance sheet. Unbelievable. Solid. What am I doing? Sorry about that. Solid. I've got multiple screens going here. I've got to get better at this. But they've got a solid pipeline of drugs, and their range is 58 to 148. Actually, let's go to take a quick look at what Yahoo Finance has got for these guys. NVO, and you can just take a quick look at the summary. They've got a 91 target. We're at 65 right now. We can look at the 5-year chart, way down. PE ratio 18 and 52-week range 57 to 148. 148, that's 3x where it's at right now. We just saw the balance sheet and income statement. Unbelievable. Look at this analysis. They just, I thought they just had earnings. Yeah, they just beat. So I don't know why they haven't updated this. Oh, wait, that says Q1 25 in August. So it must be some fiscal year thing. Okay, revenue versus earnings increasing. Strong buys and buy ratings. But to me, this one's another no-brainer. They've got a weight loss drug, Wegovy, that is huge. And let's see what we've got. They've got a PE. Yeah, we mentioned 18. It was 14 last week, but I love these guys. The PEG, the price to earnings to growth is under 1. And they beat Q1 but guided lower. That was the issue. That's why they pulled back. But you know what? That's what the smart CEOs do so that they can beat it next time as well. But they're solidly beating. They beat every quarter, and you can see the revenue came in at 11.87 billion, slightly above the forecast of 11.7, and it's a 19% sales growth year over year and a 20% increase in operating profit. So these guys are a no-brainer to me. Novo Nordisk, let me know if you're trading that. Palantir, huge. Actually, we've done pretty well just in the last, we've done well all year, but just in the last 30 days, we've made $2,436. So it's been killing it. I've got two poor man's covered calls on. This is just going to keep going up. They're dominant. They've control the AI sector. So their PE's high. It's 172. But, well, again, let's look and go back here. Let's put in Palantir. It's Palantir. So 1-year target 94. The PE right now is super high. Yeah, 510. My gosh. But I'm not too worried about that. But 3 beats. Actually, because of the valuation, less people have it as a buy. So you know what? That's why we do the poor man's covered call, so that we can make money on the short calls against it. But long term, this thing's just going to keep going. So let's see. It's at the top of the range. Yes. All right. Let's go back. But I'm not going to sell my leaps. I'm going to leave them on and play it both ways. But if there's a pullback, I'll just close out my 125 calls, and then once we have a big update again after the pullback, then I'll throw on the calls again. So that's kind of how I will play the poor man's covered call going forward. But these guys are going to dominate. So they've got Gotham and Foundry, and they've got a Apollo cloud-based delivery system, $5 billion in cash, 0 debt, 36% revenue growth. Actually, they came in at 39, so they topped the estimates, and they have it's an AIP enterprise operating system for large language models. And they deploy into Foundry. They improve process, quick decisions, and prevent problems. And this is for both commercial and defense industries and Maven. And it's a huge boom to economic growth in all sectors and all industries. So again, dominant player moving forward over the next decade and beyond. Poor man's covered calls. That's the way to go, buddy, guys. Let's see, SOFI. I just have leaps. I'm not selling calls against my SOFI just because they're so cheap. If you look at the trade page, you go to June. I don't know. I just don't like selling a $37 and then capping my profits on the leaps. So I just do leaps. And I've got, you can see quite a few, 10, 11, 12, 13, 14 leaps in SOFI. Going forward. And let's see. Yeah, it should trade like a tech company versus a bank, but these guys are going to be huge going forward. Lots of products, different products. And so once they get a client, I've done videos on it, but once they get a client, they sell them other products, they upsell. It's a great model. And so their cost per acquisition of customers coming down. I think right now their PE's 39 and PEG is like 2.2. Let's look on Yahoo. It's probably up because they just had to move up. Yeah, PE's 30 now, but still, I'm not worried about it. I'm looking long term on these guys, and that's what I like about the leaps is, and then 3 beats. Look at this, revenue and earnings killing it. So no brainer again. I'm trading leaps. All right, Tesla. Same situation. I've got a leaps and then I've got a put spread. 50 starting to move up near the 200, and then I think it's going to take off. Tesla. This is funny. They missed earnings, yet the stock went up. So yeah, there's a high PE, but again, it's a game changer stock moving forward. It's not just a car company. It's a robotaxi, humanoids, energy storage. Those are the 3 industries that are markets that are going to be bigger than the EV cars. And the robotaxis, check it out. I did a video on it, but the robotaxi is coming out this year in Austin, launching, and it's going to be huge. But they had an earnings miss, and it doesn't matter going forward. Let's look at Yahoo and see what they've got on Tesla. 5-year. 289. They don't have a big target. Mine's much higher than that. 52-week range up to 488 though. And then, the earnings miss. I don't care. These guys are going to be huge. So I'm long with a put spread, and I've got a poor man's covered call as well, and I'm going to keep doing that. Trade desk. This is a new one for me. I've got to dig into these guys deeper. Maybe I'll do a video and a deep dive into the trade desk going forward. Maybe I'll do that this week. Let me know in the comments down below if you'd like that. But they do cloud advertising. I'm going to DCA, dollar cost average, poor man's covered cost. They're down right now, I guess, because of the lower ad spend. But let's look at the Yahoo Finance. I had this on my list, and I was waiting for a pullback, and I think we got it, and that's why I'm jumping in now. So they've got an 86 target. We're at 71, so that's good. 52-week range up to 42, up to 141. So we've got a lot of room to move on that. PE's 86, a little bit high, but it's going to be that way for these tech companies. Analysis page. They beat earnings the last 3 times, all strong buy and buy ratings. And then if we go to Tasty Trade, we can go right here. Let's look at about what they do. Global advertising tech company. The company offers self-service cloud-based ad buying platform that empowers its clients to plan. So yeah, they've got huge contracts, and that's I saw another video on it, but they've got huge contracts with some of the big companies as well. So platforms allow clients to execute integrated ad campaigns. So yeah, they're working with Amazon and all the big guys, I think. But again, I'll do a deep dive into Trade Desk. And what I'm looking to do is I'm going to sell the 313-day, or I'm going to buy the 313-day 70 call and then sell a 77 against it. So that'll allow $6 on the upside. And let's see how much we're collecting on those. So if I sell that, or if I buy the 70, I'm buying it at 1620, so $1,620, and then I'm going to collect against it. I was going to do the $200, $214. So the initial investment is 1620 minus the, well, actually we can just look right here, minus the $200. It's trading right here at 1386. So for $1,386, I'm going to put this poor man's covered call on, and then I'm going to collect $200 a month. So yeah, it'll pay itself off in 6 months, and huge upside. So those are the top. Oh, Upstart's the last one. Let's see what I've got on an Upstart. Upstart, I've got 2 poor man's covered calls on. We're at 47 right now. Trading range is 20 to 96. We're at 47 right now. So again, the 50 days starting to getting close to passing that 200. They've got 3 beats and a buy ratings, lower rates. So there's interest rate cuts coming, and those are going to help going forward. Did we talk about interest rates? I don't think we went into. Yeah, we didn't go into all the different sectors. But we've got healthcare down 4% in the last 5 days. And year to date, discretionary is down and tech's down. So economic, actually, I think I did go. My memory is gone. All right, Upstart, let's punch that in. UPST. Okay, and then let's go to the 5-year. 1-year target's 58. Mine's much higher. What do I have my target at? It's higher than that. My target's at 75. And 52-week range was 20 to 96. And then Analyst, 3 beats. Yeah, I like Upstart going forward. But 2 poor man's covered calls. Let me know if you're trading that. Guys, I did forget to go through this in the beginning, so I'm adding it right here. Fear and Greed Index at 62. So we're in extreme greed. So I want to start taking the winners off and going ahead and having some cash on the sidelines waiting for a pullback. If we look at the different sectors, in the last 5 days, last week we had healthcare way down. You saw that big drop in Lilly that we just went through, and why I think there's an opportunity there. Novo Nordisk as well. And year to date, consumer discretionary and tech are down. Economic calendar for this week, we've got CPI coming out. 0.3 is here's the medium forecast and the previous, but core CPI 0.3 is expected. So we'll see how that comes out on Tuesday, and then Thursday we've got core PPI 0.3 expected as well. So we want to see if inflation is in check. If those numbers are good, then that's good for the market, because the Fed knows that they can do those interest rate cuts coming. So right now we're at 4.25 to 4.5 on the interest rates, and Powell just spoke and didn't lower interest rates. But in July we're expecting a 0.25 point cut. So that's the first cut. September. Actually, July is 4 to 4.5, and then September, still a better chance of no cut in September. But October, another 0.25 point down to 3.25 to 4, and then December, 3.5 to 3.75. So they've got 3 rate cuts priced in going forward for the end of the year. So that's going to be good for stocks. All right, guys, good luck this week. Make sure you hit like and subscribe down below. Download the free options workshop. Leave a comment, ask a question. I answer every one. Thanks for watching. I'll see you in the next video.